we specialise in investing in commercial and mixed-use property. Really, it's commercial, but usually with commercial, we get an element of residential, so we have an element of residential speciality. We like straightforward commercial investments. We like lease advisory. We like that kind of tactical stuff. We very rarely get involved in the developments or the serviced accommodation or the HMO. We love commercial. That's where we sit. So my background is, I'm a chartered surveyor, I'm a property investor. I've been a university lecturer in property management. I've taught undergraduate, I've taught postgraduate, but really my bread and butter has always been commercial strategy, commercial and property investment strategy. And that is why I started NC Real Estate, because I have worked for huge portfolios. I've run NHS portfolios. I ran the commercial property portfolio for the Sloane Stanley estate in London. I've worked for hedge funds. I've run huge portfolios, and it was like living in a different world. These people have so much money. It doesn't matter if £1.5 million worth of rent is misallocated by their accountant. They don't care. And what we would do is we would go along and we would buy up more and more property. But what I was realizing is the smaller landlords really didn't stand a chance against these bigger landlords, because they couldn't afford to pay an asset manager a six-figure salary to come on board and help them to run these property portfolios the way that they need to be run. As with anything, people are going to say, property, oh, it's so passive. Well, if you are not making good decisions about your property portfolio, it's going to fall over. Especially in this market where we have got so much more regulation. Mortgages are changing on a weekly basis. Our tenants, the way that they operate changes because the economy's changed. We have to be aware of all of this. So in order to play in the property arena, you have to get your hands dirty in your property portfolio, whether you have an advisor like me and my team on the scene, or whether you're doing it yourself. You know, for some property, there's an element of passiveness, but for the most part, we need to be making good decisions all of the time. What do we do? How do we work with our clients? Well, we have 3 services. Number 1, our members club. Mark's in the members club. Our members club is the place where you can come and join us on an annual basis, and it's like having a surveyor in your pocket. Essentially, come and talk to us about the deals that you're doing. Actually take some action on it. Go out, find properties. Come and talk to us about it. Come and show us your deals. Say, hey guys, I want to do X, Y, and Z. What's your opinion on it? We've had that this week. On Thursday evening, we're going to be discussing a purchase lease option on a hotel that one of our clients wants to buy and turn into something rather exciting. But we do that week in, week out. Our job is to look at your commercial properties or your mixed-use properties and help you with that second opinion and tell you where you should be looking, what you should be looking at, and we also want you to question us. We've seen a lot between my team and I, an awful lot, but every property is different, every person is different. So the circumstance is always going to be slightly different, and that's the fun of property. But if you're lacking confidence when you're doing it on your own, or you simply don't have a community around you who's doing the same things, and you don't have a professional that you can talk to, that's where our members club comes in, and that is our starting point. That is very much the starting point. Everything else comes after that. So that's where we begin. So today, what are we going to do? We're going to very quickly go through how we can successfully invest in commercial property this year. I'm going to give you some of the key tactics that you need with everything. I'm going to give you the theory, the key tactics. I'm going to tell you we are in a market that is moving very, very quickly. So your job is going to be to take the tactics and use it in a way that works for your property portfolio. Be innovative. Innovation is key right now. If you go out to a commercial building and you see that something is possible or something could be possible, let's run with it. Right? Let's run with it, because all of a sudden the things that we were seeing in the market 5 years ago, 10 years ago, don't work so much. And hey, that's cool, because trends change. We wouldn't want to be in buildings that we were in 5, 10 years ago. Look at sustainability. Look at the things that we can put into these buildings. Look at the tenants and what they're using buildings for. It's amazing. And they adapt really quickly. One thing I do want to note is the amount of people that come to me and tell me that the commercial property market is falling over. We'd actually be more wealthy if people came with all their problems to us and we just asked you to put £10 in a bucket for being negative. You know, the amount that we could earn just by doing that. What goes on in the news is general. What's actually happening in the local market is very different. And you get to make the decision as to whether your property is going to work or whether your property is going to fail. Again, that is on you. You are making the decision to buy in a certain place. You can't obviously pick your property up and move it, so you will have had to have made a decision about that. How you let it and whether you get tenants depends on how proactive you're being and who you're employing to do it. So, UK commercial property deal making at lowest level in over a decade. Well, we do get outbid quite often, and we're seeing people come in with ridiculously high offers still. So it's not as if the market's not moving. UK commercial property values set for a new year decline? Maybe. But are we seeing that in principle? No, because again, people have got a lot of money to be spending. When Bryn talks to you about pensions and how much there is in pensions, that is your competition in the market. And they quite frankly don't mind overspending sometimes if they've got money to deploy. The easy money of the UK property market is a thing of the past. Well, it depends on how you work it, right? So take the big headlines with a pinch of salt and actually just go out there and do it. That's all we can say to you. So also, do not assume you know what's happening with the market until you're in it. So, my telephone box. I decided, because I had a bit of FOMO, all of my clients were opening SaaSes, and I thought, all right, I'll do it too, because I'm a business owner, I want a SaaS. I didn't have much money to put in it. I'm in my 30s. In my corporate career beforehand, every bit of money that I got in my bonus, in everything that I got, I'd say, don't put it in my pension, I want it, I built a property portfolio from it, right? So I had nothing really in my pension, but I went to Bryn and I said, Bryn, I'm going to start up a SaaS. And he said, what are you going to put in it? I said, commercial property. Didn't really have much money. I had about 15 grand, put 15 grand in my pension, bought a telephone box in central London, rent it out for £80 a month as advertising. Right? Commercial property. Might not look as everybody else thinks it should look, but you can get started really small. And everybody always laughs at me. Now if you go to Russell Square, you can see some telephone boxes with NC Real Estate branding all over it. We do only own one. The second one was an accident. The person who did the vinyls accidentally broke into the wrong telephone box, put our vinyls up, and gave us the key for the second telephone box as well. We had to send them back and say, hey guys, can you please do our actual telephone box, which they did. They said, do you want the vinyls taken off the other one? Well, I said, how are they going to know who's holding the keys? So we've left our vinyls up until the point that someone comes and tells us, hey Natasha, so your vinyls are up on our telephone box, and we're going to say, oops, we're really sorry about that. Here's your keys back. We'll take it off and clean it. So that's the story behind that. 48 Menard Street, when we bought that, this is down in Cornwall. We were told, don't buy down there. It's such a terrible street. No one's doing anything. Lo and behold, commercial tenant was the seller of the property. We bought it off of him. He was in a really distressed position. We bought it off of him for $230 last year. He wanted to keep hold of the commercial units. It was a bit of a sale and lease back. It was a bit of a dodgy sale and lease back. The commercial tenant didn't really have any money, but we did it for the short term. There are 3 flats above this commercial unit, all of which we've been on a maintenance turnaround, so we've been maintaining it. We've got a new tenant in there to take the lease as the current commercial tenant's coming out. We're going to put a barber shop in there. And they want the back, which is a gorgeous garden overlooking the sea. They want the storage out the back. They're going to go in there. We've turned it around. that property will be going to auction in May because our clients got better use of the funds elsewhere. We're just up-leveling. We're hoping to get it to sell for £300,000 plus. We have put it out on the market for feelers prior to that if anybody wanted it before it actually went to auction. But again, people said to us, oh, what are you doing down in Cornwall? We're buying opportunities as we see it. Tenants love these small units and we let it out. Tenants still looking for space. 13 to 14 Marketplace, Penzance, just another Cornwall. Another Cornwall example. We have a music studio looking for the second floor. We have a couple of startups. The rest of that building is let. It let. Arbery Arcade. That let, the 2 empty units that we had, it let. £10 more per square foot than we had it on before. It was only at around, where was it, Caroline? Well, 1850 and it's gone up to 28.50. Yeah. So we're seeing tenants take space. They like the smaller units, but where we are being told, no, well, there's no tenants around taking your space. There are. Tenants have been so innovative during COVID and coming out of it that they want to come and build their businesses, and we want to be the agents there or the surveyors there to support them. I thoroughly believe that. You know, take your deposit, put a personal guarantee in place if you will, but come on, let's help these small tenants. It's really, really important. So attracting the right tenants, what are we doing? Well, we're being more proactive than we ever have been. It used to be, in 2012, 2013, we would put space on the market and people would buy our hand off for it, and it didn't matter what it looked like, it didn't matter really what condition it was. They would come and take the space. I was in London yesterday and I was looking at just what had happened in King's Cross, and I saw Wolf and Badger had gone into the new King's Cross development. Well, back in 2012, when they were a new firm, they had investment that, as a retailer, they could go into Mayfair and take rent for 130 grand a year. It was because people were investing in these startups and they didn't mind. Money was cheap. They could get hold of money. They could throw it in there. Unfortunately, the first time Wolf and Badger launched, they fell over. But I'm so happy that they went back in there and they're doing cheaper rent, smaller premises. But the shop is phenomenal. But now we have to be researching who's going to be coming into the units. Who do we want in there? What's it going to look like? Maybe it's not the traditional sense of what we were seeing beforehand. You know, I was in Scotland and I saw that a sensory play tenant had set up in a couple of the old shopping centres. How cool! We wouldn't have seen that before, but now there seems to be quite a good business for it. And what a good way of getting young parents into a shopping centre and having a coffee shop next door, and they stick around. It's changing, times are changing. Ask neighbouring tenants. Neighbouring tenants will tend to fill other spaces if they're doing really well, so always ask there first. And then price the building with tenants in mind. I'm not saying reduce the rents, I'm saying what do these tenants want to see? Do they want to see all-inclusive rents? Do they want to see just a monthly figure? How much is it going to cost? Is that the rent per square foot plus the service charge plus the utilities all as one figure? Or do they not mind having it split out between a rent, their utilities, their service charges? Find out what's going on in the local market, see what other landlords nearby are renting their space out for, and then see how to position it so that you get the best tenants. And make it simple. Most small tenants nowadays can't afford to be represented the way they were beforehand. It's all right, but make sure that they understand what's going on. You owe it to them, because otherwise your management, a couple of years down the line, when they say, well, I didn't sign up to a rent review. And you're thinking, yes, you did. Look, we've got a signed lease here. Just make sure that they understand what it is that they're signing up to. That builds a relationship from the beginning, and it means that we get good tenants in who will stand the test of time. They will want to work with you. So next up, why commercial property prices are falling. Well, as I said, number one, there is a lot of money still in this market. So let's just acknowledge that you may go out to bid on a property, but if there is someone out there bidding with a lot of capital, chances are they are going to come in higher. That's fine. We can't control that. We cannot control what someone else offers on a building. Out of our control. We don't even think about it. But one of the key things you need to remember is that as the Bank of England base rate rises, so do commercial yields. It's really important. So a big saying that Caroline at the back will say to our clients constantly, commercial property yields can never be below the Bank of England base rate. Right? So as the base rate rises, all commercial property yields that we're going to be valuing on rise too. So that's going to make your building less valuable. It's just the nature of where we are at the moment, right? So how do we look at a general value of what a commercial building is? Now, I'm going to caveat that with commercial valuation is genuinely an art, not a science. There is a set way of doing it, and then each property is itself, and it has its own quirks, it has its own risks, it has its own leases. So that will be taken into account within the commercial valuation. But as a general rule of thumb, here's what we do. We do whatever the annual rent is multiplied by the yield multiplier or divided by the yield as a percent, and that gives you your commercial property value. So if I take out my phone, and we can all do it together, just so that you get an understanding. Just a general overview. So say we have a rent of £20,000 per annum. There's two ways that I would work out roughly where the value was. If the yield was, say, 9%, I'd do 100 divided by 9, which would give me my yield multiplier. Anybody shout out what that is? Who's following along? 11.1. Yeah, 11.1111. Times that by 20,000. What's the value of that unit, roughly?
222,000.
Great. Perfect. The other way of getting to that is we do 20,000 divided by 9%, and that will give you the same outcome. So whichever way around the triangle you want to go. So the lower the yield, the higher the value. The higher the rent, the higher the value, traditionally. This is where I get asked, Natasha, where do yields come from? This prime yield guide is slightly out of date. Knight Frank just put out their yield guide for the 5th of April, so there is an April one out there. Where do we start? Well, prime yield guides are really helpful because this kind of sets the benchmark for what's going on in an area that we're looking at. It's not the be-all and end-all, but I would suggest whatever property you're looking at, and these are long documents. This is just a screenshot of page 1. Have a look at the property that you're looking to buy. Go and have a look at the prime yield guides and see, okay, whereabouts does my property sit in with that? What is my yield this month? Where does that look? I would then probably add a percentage to that as a minimum, just to factor in some risk. And then I would have a look and see, what does the rough value of my property look like? That's number one, that's step one. So that's where I'd start. CBRE do something similar, JLL do something similar. Sign up for the big firms' research, because when that comes through to you every month, it also gives you a very good indication of how the commercial property market is changing. Right? Because you can see it's got all weaker, stable, weaker, weaker. This month's is a bit more stable, and we've got actually some moving in a positive direction. So that's great. Commercial property market is looking a bit better this month. And then what you're going to do is either we look at what yields commercial properties are selling at through going through EIG, which has all the auction data. We look at CoStar, which is where we pull all our data from. We look at Adozo as well, which is where we get data from. I know that Some surveyors use Nimbus maps. At the moment, we don't. But again, it's just personal choice because we subscribe to CoStar. And we look at where yields are. What has sold in the local area and what was the yield of that selling price? Then we look at what market rent would be, and we come up with a value there of roughly where that commercial property is. So again, do that. It's actually not a very complicated process, but it gives you a line in the sand. Is that property being marketed at the right price or not? And a lot of things that say this is being brought to market with development potential are coming to market completely overpriced, and we tend to just come back to them in 3 to 6 months' time, in which case they've been hanging around and then they're prepared to take a lower amount at that point. Now, the other thing I do want to note is that capital values do fluctuate anyway. Capital values of commercial premises. Now, this is extreme, really extreme. If you saw your property go all the way down to zero, there'd be an issue. It's not that extreme, but I wanted to show you really what happens. Yields are a representation of risk. The risk will come from how long you have got that rental income coming in for. If that rental income is secure, so it's been done at market rent, you've got a good tenant in there who can afford to pay that market rent. If you've got that market rent then secured for the next 5 years, for example, that's a lower yield because you know, and you could quite reasonably state or think that over the next 5 years, I'm going to get that rental income in. That is when your commercial property value really is at its highest. When it's recently let, you've got a good lease in place, you've got a good tenant in place. As the time on that lease starts running down, the value comes down. That's because you've got less guaranteed rental income coming in. Right, that's very, very simple. So it becomes a riskier rent. Then you get to rent review. At rent review, you put your rent back in line with wherever the market is. So now we're back at market value and we know the value's increased a bit. Then we run down to the end of the lease. Obviously, towards the end of the lease, we don't have as much guaranteed income. The value of the property is going to be lower because the rent is riskier. So then what do? You put a new lease in place, the value goes back up. So you can always be moving your commercial property into a higher value if you want to be. I would say don't keep renegotiating on your leases with your tenants. If it drops below 2 years, start asking your tenant if they want a longer lease. But you know, anywhere above that, I wouldn't bother. Just leave it to run. But it's a good way of thinking about it. So you can always be thinking, how do I get that commercial lease, that commercial property back into its best value? The other thing I will say is that market rents on the whole is still stable. One thing we have seen on the 1st of April is that the Valuation Office Agency came out with its new rateable values for all commercial units. They could be about right. They are suggesting that their pound per metre squared is about right based on the market. Always question their measurements because I have never seen a Valuation Office Agency value and the measurements that say a surveyor or the property manager goes out and does be similar. But it's a good indication to where rents are at the moment. For the most part, the Valuation Office Agency brought rents down so that tenants didn't have as big a service charge, bigger business rates obligation. It's just something that we've seen. But on the whole, I haven't seen rents drop. And that is because there's still demand in the market, which is really interesting. It's not to say that in the next 2 years I'm not going to see anything change, but for the moment, whilst businesses are still on their bounce back loans, and that was really cheap lending, they're still on these very cheap interest rates, so we haven't seen high interest rates kick in for a lot of businesses at the moment. And with that in mind, for the most part, businesses are doing okay. Tenants are looking for more sustainable buildings though. It's really important. So whilst you might think, oh my gosh, with commercial, I'm going to have to get my EPC rating to a B, it's a good thing. Tenants will love it because you're saving them on utility bills. So please do make sure that you're looking into that in a positive way. They want cheap buildings. So anything you can do to bring that, that cost down, do it. Changing risk based on increasing return on capital employed. If I had £1 for every time someone came to me and said, Natasha, I want all my money out of the deal, I wouldn't even need to be a surveyor. You could just tell me that, put £1 in my pocket again. We wouldn't need to do anything. Maybe you can get all your money out of your deal. Maybe you can't get all of your money out of the deal. But people want all of their money out of the deal and they don't want any risk. Can't do it. Can't do it. Unless you're really lucky, you stumble across a unicorn deal, or you stumble across someone who desperately just needs 60 grand out of it. Maybe as there's repossessions over the next couple of years, you'll find something like this. But as a general rule of thumb in commercial property, we tend not to do it. Commercial property is far more stable investment than that, right? Commercial property, I think, is actually more bread and butter than buy-to-lets, or I don't think HMOs or serviced accommodation is bread and butter. But quite frankly, with a lot of commercial property, you could buy it, put a 5-year lease, a 5-year FRI lease, so for repairing and insuring, and not really have to do anything, and that tenant pays you for it. You don't really have to do so much to it. But if you want to know, what type of building shall I buy, Natasha? Well, if you want a 10 to 20% return on capital employed, we do find them. Most weeks we come across them. That means you might have to renegotiate on a lease. You might have to sort out some management problems, but on the whole, the headache will probably take you a couple of months to sort out. You want the higher return on capital employed? Well, the higher the return on capital employed, the more of a headache you're going to have to go through. It could be that you've got to fill vacant space. It could be that part of the building is derelict. It could be that tenants haven't paid their rent for so long and the current seller can't be bothered to get them out. They just want you to deal with it. You know, all of these headaches which take a lot longer to deal with, that's where you're going to get your higher return on capital employed, because a seller is basically saying, I don't want to do this. It is a pain in my ass. I'm selling it. You get the money out of it. And it's really possible to get the money out of it, but you have to be prepared to put the legwork in and have a few sleepless nights and have a few hard days. And then if you want that 100% return on capital employed, well, I would suggest you be looking for a while for that as well. They don't come up that often, although everybody seems to think that on a daily basis we get them through. You're looking at a full redevelopment. You are looking at completely re-tenanting it. In actual fact, you are probably, with commercial buildings, looking at changing the scope of the local area. You are looking at changing it from a place that people don't want to go to a place that people really want to be in. It's completely possible. It really is. I've done that for clients. But that doesn't just happen like this. We have to work on that area for a good couple of years. And we have to work with neighbouring landlords, or we have to have a strategy whereby we're buying up the whole of that area. Again, we can do that, but it doesn't always happen overnight. And I really have to, with commercial property, make sure that you understand that commercial property is a really good way of making cash flow. And over time, over the long term, 5 to 10 years, these buildings go up in value. There's not too much you have to do about it. But in the short term, it depends on your risk appetite. So how are we going to get started? If you wanted to get started in commercial property this year, how would you get started? Well, number one, we want to set our goals. Number two, we're going to be doing deal analysis and going out on viewings. Go and see these commercial properties. Please go and see them. Everybody says to me, Natasha, where should I start? Where's the best location? Within how far you are willing to drive to go out and see them. Nowadays, I don't see the commercial properties that I buy. I've got actually one down in Barnstable, which I bought tail end of 2021. It was on a 5-year lease at the time, 165,000, £15,000 coming in, complete 3,000 square foot building, tenant didn't really want to do anything apart from stay in trade. I thought, well, at the end of that 5-year lease, I'll take the upper parts back and I'll do a redevelopment of residential for the upper parts because it's in a seaside town. Never seen it. I sent my structural engineer down there and my building surveyor and said, is it all right? They said, yeah, absolutely fine. Natasha, buy it. So I bought it. 2 weeks ago, the tenant came to me and said, Natasha, can I have a lease extension? Absolutely, so I don't have to deal with it. Right? So I choose to go with the simpler things sometimes because at least I know that on that property, I'll get £700 a month net after finance, and that all goes into my pension. And then I buy more commercial property with it, or I invest. However, Bryn will talk to you about that. But with commercial, I suggest you do the basics and you do the hard and you run them simultaneously, and then you have a really good portfolio mix. So yeah, go view it, go see what goes on, especially as you're starting out. Identify how you're going to finance it. There's loads of brokers and finance specialists in here. Make sure you've got someone you can work with. As I said, finance changes weekly at the moment. There's some things we get finance on and then we get told we can't get finance on it. We have to change the direction that we're going in. I firmly believe everything is possible. If you've got a good deal, it should get financed. And I hope people are nodding along with me. As a surveyor, I firmly believe that because I can get behind a deal and think, yeah, this is going to stand the test of time. You have to have that determination to go out there and test the market and get that finance. That's something you really have to do at this time. And then don't forget to offer. You are not going to buy a commercial property if you don't offer. Sounds stupid, but so many people say, oh no, it's never going to happen for me. Well, how many properties have you offered on? None. Well, I don't know how you're going to buy something if you haven't offered and you've had nothing accepted. So please do it and test the market. When you go into offer, we're lucky in England and Wales that you can actually pull out if it's still not the right deal. Because with commercial property, we still have to do a lot of due diligence after we go under offer. You know, we've gone under offer on several different properties this week, and that's great. We did our initial analysis up front, but now the even more rigorous stuff goes into place, like the building surveys. We get architects out. We make sure that we're doing the right thing if we're doing a development. Now, if you're just buying a bog standard 5-year FRI lease, you're kind of done. You just wait for conveyancing. But if there's interesting things you need to do, we have to get the whole team out. We have to start spending money on it. You can still pull out up until the point that you exchange. So I don't think you should be afraid of offering. And I will also say 99% of commercial buildings that we buy, we tend not to purchase them for the offer that we actually agreed at the time when we offered, because once we start getting our professionals in, it changes what we think we're buying. There might be a bit more work. There might be some adjustments in rent. There might be some adjustments in deposits. So that will change on exchange anyway. So the offer price is kind of that rough. This is around where we're going to pay. We're now going to start all of our due diligence properly, and we might change it. And you get to do that as well. I mean, you get to do that with resi, but I think with commercial, it seems like such this bigger step. It's not. Still make sure that you're renegotiating all the way through the conveyancing process. And where are you setting up your search? Well, we'll still go through agents, Rightmove, auctions. LoopNet is really good. The same place that you would find any other deal, go to it for commercial property. Too often, everybody's trying to reinvent the wheel and said to me, Natasha, how do I find these off-market deals? Or how do I do this? Or just get started with the regular route. You start talking to agents, they're going to send you stuff. If they think you're credible, they'll send you stuff. Commercial surveyors and commercial agents aren't terrifying. They'll send you stuff. If you can show them that you're a credible investor, they'll send you stuff. Now, something we've got for you today is a goals spreadsheet where it takes about 30 seconds to set up your goals. Sam and Caroline have cards with our QR code on. But essentially, you can sign up and we'll send you through the goals so you know where to start. It gives you the parameters. What purchase price should you be buying the property for? What rental income should you expect to get from the property? Really simple, 30-second stuff, but that gives you your search criteria. You know what you want to expect from the property. Search within an hour and a half of your home. We're good, let's get going. If you want to invest in commercial property, now's the best time to start. So today it's been a really quick quick run through of how to get started in commercial property and how to start investing. That didn't come up properly, but certainly we've got so many of these little cards, so come up to us. If you want your goals spreadsheet, come up to us and I'll give you the QR codes to scan. We've each got cards that we can hand out so that you can get hold of that goals spreadsheet.
I should be able to put it on there as well in a minute.
Oh yeah, perfect, thank you. That'd be amazing. The long and short of it is that commercial property is just a slightly different mindset. We need to be more innovative than we ever have been. That's great. That's what we're in the property market for, right? If you honestly are here for the long term and you've got this goal of retiring with this property portfolio, well, the legwork you do now will set you up so far for what you end up with, right? Because ultimately, by the time you've retired, I assume the goal is not to be running around after your property portfolio. It's going to be, here's my asset managers, they're going to look after it, and I'm just going to make the decisions at the top. I assume some people might want to continue with it. But it's an exciting industry to be in. What you hear in the news is not actually what's going on a day-to-day basis. It is very different. So I encourage you to go out, start looking, and see what you find. And if you do need that help with that second opinion or a pair of eyes from a chartered surveyor to look over it, that's what the Members Club is for. We are the people here with a surveyor in your pocket who can say, yeah, I like that. Why don't you just have a bit of a look here? Or, I don't know what you're doing here. I'd only buy it if you bought it at this price. And that's what NC Real Estate is all about.